Hi everyone and welcome back to the channel. So in this portfolio update, I'm sitting at $197,013 and I received $633 worth of distributions for October. So quite a nice jump there with my quarterly pairs paying. And yeah, so let's get into um, the funds one by one. So VFV is skyrocketing to a new all-time record high, going over 140, and actually it went over 142 already intraday in the last trading day on Friday, and it closed just shy of 142, sitting at 141.94. At this price, the current yield is actually based on the last distribution, almost less than 1%. So that just kind of puts a little bit of perspective into how high BFE has soared. So it is a very welcome increase, but it's getting pretty hectic. I think that's pretty crazy. Like the next price target's going to be like 150. Like it's just insane to me to think like it's going up that much. So yeah, a very good week for VFE. The US dollar started to rise a bit too. So as you guys know, VFV is unhedged, so any fluctuations in the US dollar relative to the Canadian dollar will affect the price. So the US dollar gaining ground relative to the Canadian dollar is going to add to its performance. So we saw a bit of that this week as well. Moving on to VDY, it has been doing excellent. So it is getting close to $50. It's at 49.25 right now. Just really good price appreciation this year in 2024. It's been doing excellent. And even at this um, relatively high price for VDY, it is over a 5% yield based on the last distribution. So it just gives you a little bit of context into like what's like I like looking at the yield a little bit to show you like what's potentially overpriced or underpriced. And I still feel like even at this price, VDY still has a ton of growth to go. So yeah, like I definitely see it going over $50 in the medium term. So as far as the international funds, VIU and VEE, they are both doing excellent, both over 10% price appreciations for me. But most notably, VEE is now overtaken VIU in my portfolio in terms of performance at 11% right now. And it's had just a very good surge that I covered in the last video. So that is great to see as well. And then for the income-oriented funds, ESPX, the S&P 500 Enhanced Yield Fund, and ETSX, the S&P/TSX 60 Enhanced Yield Fund, they are doing great. They are capturing lots of upside. The price appreciation is really good, and the dividends or distributions are just continuing to pump out solid numbers. Um, they've been remained very consistent at these prices. The yield for ESPX is below 7.5% right now, and ETSX is just a little bit above 9%. So I was watching Passive Income Investing, Adrian's channel, and he was saying that he thinks that there's probably going to be a distribution increase for these funds relatively soon, maybe in the new year potentially. So I agree with that. I think ESPX is more so ESPX rather than ETSX. I think ETSX still over 9 is probably less warranted for a distribution increase, but I think ESPX definitely at below 7.5% now. So they could probably bump it up to 16 cents just like ETSX, and the yield would be, let's just take a look here. If we look at, if we do 16 cents times 12 months, oh, oops, sorry, 16 cents times 12 divided by the current share price, which is 21 or 25.14. Yeah, it's well, actually, wow, it's still seven. It would be 7.6%. So they could increase it even like probably even more. Like that's probably really safe bet. They could definitely 16 cents would be really easy for them to do. I would welcome it. It would increase my monthly income quite a bit, I think. So yeah, they could probably increase it even more. So yeah, these funds are just continuing to amaze me. They are the perfect hybrid investment, in my opinion. If you're not into using leverage and you want to capture lots of upside still while getting a nice monthly income, I think these funds are absolutely perfect. So, and then moving on to the FHSA with VEQT. it is over 20% price appreciation for me. The performance of this has been great. If you are looking to buy a house and you have a decent time horizon, for me, it's over 5 years. Um, it's kind of funny because I just laughing a little bit because the a lot of YouTubers when the FHSA was coming out were saying even if you're looking to buy a house in like 5 years, I'd recommend buying like um, you know something more conservative like a VBAL or like a balanced fund or a conservative like VCNS, I think the ticker is a conservative fund where it's like lots of fixed income exposure to lower your risk. And I mean, time will tell, but honestly, I feel like the price of a house in Canada is ridiculous. So the down payment, like the average house in Canada, um, if you wanted to do 30% down on like add the average home price in Canada, um, you're probably going to have to pay around like 250 to 300K for the average home price in Canada. So just let that sink in. Like you need, even though the lifetime contribution to your FHSA is only 40,000, so you're going to need quite a bit of growth to help supplement your down payment. So for me, like if you have a decent time horizon, all equity is the way to go, in my opinion. Like if you're 5+ years, like VQT is a very nice play because it's internationally diversified. I don't have to worry about like balancing between US, Canadian, international. Just um, make it easy for me. And also, what's nice about VQT is it's annual pair, so I'm not going to get used to like that. Well, I just don't want it to like influence my monthly and quarterly income numbers here as much. Yeah, it's going to affect it once a year. Like obviously, the payment for January 1st of this year was very high because of VQT added there, and it's going to be potentially over $1,000 based on the projection here. But yeah, I'm not gonna like I just don't want it to influence the numbers too much because I'll be like because obviously this money is gonna go to a down payment for a house, so eventually that income's just gonna get sliced off. So if it's only paying once a year, that's perfect by me because I'm not used to that income anyways. As far as cash, I put a poll up on my YouTube channel and I only got 6 votes on it. So if you guys made it to this part of the video, please go to my community section of my YouTube channel and please vote on this. I was just curious to see what everyone thought about the SPLT ETF, which is basically a universe of split share class preferred shares. So basically what it is you get all these split corps um, their preferred shares, which basically just pay out all of the dividends from the underlying shares, and you get about a yields over 6%, and usually not a lot of like price fluctuation with them. They're a lot more tax efficient versus because cash is obviously interest income, so it is taxed like very unfavorably versus SBLT. If it's dividend income, it's going to be taxed a lot better. So I'm just concerned with the interest rates dropping that the cash ETF is going to start paying even below 4%. And then you're barely beating inflation because I like, yes, um, I think the inflation number for Canada was reported as 2% for September, but I think they underreport that quite a bit. Like they use a lot of hedonics and substitution to manipulate that number quite a bit. So you're like based on the goods and services that I'm buying, inflation is 100% higher than 2% in my like. There's no question about that. Based on the basket of goods and services that I buy, it's definitely higher than 2%. So like I am barely beating inflation with this cash ETF. I know it's the emergency fund and you shouldn't worry about it, but it should be short term. But I can't help but feel like once it gets below 4%, like that's pretty brutal. So I might consider if they cut it again, I'm gonna revisit that. But yes, please let me know in the community section. They only got 6 votes, so I want some more opinions on this, like if I should make that swap. So I'm not in a hurry to do it, but yeah, if they cut the interest rates again, that's a lot less enticing for this ETF for sure. And then lastly, we have the iShares Gold Bullion ETF. Gold is sort of stabilizing right now. I feel like it's found a nice new support level, so not too much action in the price of gold the month over month. So yeah, I did put this new graph into the spreadsheets. It is a portfolio graph, so you can see the value of my portfolio since I started investing in the beginning of like very beginning, actually the end of 2021, but like um, I just started beginning of 2022 just to make it a nice start there. I think I started investing in December of 2021 inside of Wealthsimple. So yeah, you can just see my portfolio value over time. Um, and I'm just recording even the last update right here. So that's just a new visual. I liked it better than the if you guys have seen the spreadsheet before, there was a um, monthly, quarterly, and annual principal graph. I didn't really feel like it was really giving me much value. So I feel like now all of the insights that I have below my before my sorry, after my fund analysis are very useful now. I can see my yield, it's like my historical yields, and then I can see my projected yield based on what I'm investing right now and reinvesting those distributions. I can see my portfolio value. I can see my fund breakdown. I can see my geographic and sector allocation, as well as my income breakdown, which just basically shows my work income relative to my investment income and a tiny bit of cash back reward. It counts as income, so I threw those little tiny income sources in there. I think it's interest income and then cash back rewards. So that's a nice visual there. So yeah, but getting very close to 200K in Wealthsimple. I am going to be making a couple changes that will probably push me over if the stock market doesn't start flying down. I am going to be transferring my RRSP from my employer because I basically I didn't know about Wealthsimple when I first started investing when I started working in May of 2021, and I had invested a bit in an employer RRSP. I'm going to be transferring that over to Wealthsimple because I want to just throw it in VFE. Like it's in some aggressive growth fund and with my employer. So I want to switch it over and just throw it in VFE inside of my RSP because it's going to be in Canadian dollars. That's why I'm going to buy VFE. Otherwise, when I do my RSP contribution next year, it's just going to be all VOO because I'm going to be buying um, in US dollars to capture that extra yield that comes with not paying the the IRS tax. So withholding tax. That's the word. Sorry. Yeah, the withholding tax. It's you get to avoid that in RSP with U.S. listed funds. So I'm going to be going with that. But as for this Canadian dollar RSP, I'm not going to pay the conversion fees and multiple. So I'm just going to transfer as Canadian dollars and throw it in VFE. And then I'm also going to be selling a bit of, or not selling, sorry, transferring shares in kind from my ESP or employee savings program. But I honestly, it should be called employee stock program. It's literally just stock in the my employer. So I'm going to be transferring a bit of those over because I want to take the dividends from it and use it to help max out my other accounts and potentially sell it at a later point so that I don't have so much concentration in with my employer. So yeah, so that's about it for this monthly portfolio update, and I'll see you guys in the next video.